In this video, I want to talk about a question that a lot of people have. Are people consistently profitable from trading credit spreads? So if you're wondering, okay, yeah, credit spreads have a high win rate, but your losers are a lot larger than your wins. Are you actually going to win long term? Like, who is actually doing this and how do they do it? Those are the two questions I will be discussing in today's video. So let's jump in and explain how credit spreads work. So by default, you know that credit spreads have a high win rate by default because you lose more than you stand to win. So let's kind of walk through this for you here. If I pull up a pen. All right, so if we're trading a normal credit spread, let's say a dollar-wide credit spread, that means that the stock is trading and we think the stock will continue higher if we're trading a put credit spread. And so if the stock stays above this level, we make money. So at this level, let's say we make $30, but we stand to lose $70. So again, you have around let's just say add here an 85% win rate, right, by default. So you're going to win 85% of the time. But the problem is you win a smaller amount, but you lose a larger amount. So your larger loss can actually take out a ton of a ton of winners. And so with that, you have to understand, okay, are these actually profitable long term? Well, let me break down the math, how you know if your trading is going to be profitable long term and what to look for. Well, let's get a real example. Let's go to the trading chart here. I like to go roughly 14 to 16 days out, and we can come here. Okay, we can also change these levels here to what we want to look at. Let's look at delta. Delta is going to give us a theoretical level of how likely our trade is to make money for us. Again, there's another way to do it, is to simply do probability of in the money. You can do that as well, which is just 1 minus the delta. Anyways, let's keep this up for now. Okay, let's say we want an 85% win rate. So that means the probability of in the money needs to be 15%, or we can also do the probability of out of the money, which I think is this one right here, is going to be roughly 85%. So anyways, we have these numbers by default. We have a theoretical level based on that. So for instance, an 85% probability of making money is the same thing as a 15 delta, just because 1 minus 15. Anyways, so this is our 85% win rate trade. What do? Well, we sell this level, and we buy this next one. Cool. This gives us a 13-cent credit as it's trading right now. So, okay, 12 cents. Okay, let's just say, it's saying at 12 cents longer. So let's just say a 12-cent credit. Okay, cool. So we have an 85% win rate. This is math that you should be doing with every single trade. An 85% win rate. We have a $12 credit, which by default gives us how much of a loss? Well, 100, because it's a $1 wide spread, minus 12 gives us an $88 loss. So this is a bit worse than the 3070, but it's 12,888. Okay, cool, but we have an 85% win rate, so that's good, right? But will you be consistently profitable at that rate? Well, let me show you how you can determine that. You simply need to put in this. Once you know your win rate, your win amount, and your loss amount, it's simply just this. We're going to do 85, which is our win rate in a number form, not the percentage form, so not 0.85, but 85. Then we're going to multiply that by 12, because that means how much are we going to win? We're going to win 85 times out of 100, and we're going to win $12. Cool. Now we're going to subtract the amount you lose, which is going to be you're going to lose 15 trades out of 100, and we're going to multiply that by our loss amount of $88. Okay, so to take this trade right here, if we take this trade over and over and over and over, yes, we're going to have a lot of wins in a row because it's an 85% win rate, but if you can see here by default, it gives us a minus 300 return. So that means this right here is going to have a long-term return of minus $300. So tell me, if you can have an 85% win rate, but you collect $12 and you'll lose 88, should you take this trade? Absolutely not. This is what a lot of credit spread traders do. They go, awesome, trading credit spreads has a super high win rate. I can just put on an 85% trade over and over and over and make a ton of money. That's what they see and that's what they go for. Now, this is the problem. They're not looking at your long-term expectancy. Very simple math that tells you if you do this trade over and over and over, based on how much you stand to make, how much you stand to lose, and your win rate, will you actually make money? This shows right here you won't. So even though you have an 85% win rate, you need to bump it up if you want to have a long-term positive return. So now that we know that, we need to know that yes, trading credit spreads can be profitable, but we do need an edge. An edge means something that we know that others don't, so that we can bump our win rate to be a bit higher, thus giving us a positive long-term return. So what can that be? Well, the one that I love using myself is called following the trend. Sorry, I'm looking at this whole chart. I'm looking at what I should do. Anyways, let's look at the chart here. So following the trend is my simple method of understanding what I should be doing. So for instance, this right here, we're going to go in, we're going to look at indicators here, which is right here. I'm going to be honest, I have not actually ever used this before. So give me a quick second. We'll just add a line. Okay. You can see here how if we're looking at this stock or QQQ, you can see here that it's following a trend. A trend is higher highs and higher lows. So this shows you exactly what's going on with the stock. If the stock is making lower lows and lower highs, then it's trending down. So what does this mean? Well, it simply means that if the stock is trending up, I should be trading put credit spreads during this entire time. But what's my edge? When do I get the highest return for the higher win rate when I'm trading put credit spreads in this way? Well, the closer I get to this line, which is where it seems to bounce every single time, the closer or the higher my win rate will be and the more credit I get to collect. So for instance, it's really far off this line, but if this line was trading closer to here, then guess what? I would have the ability to collect roughly 20 to 25 cents, right? And I would have to go out less far. And so again, that's how I increase my win rate, is by doing that. So for instance, if I'm waiting for this to sell off, for instance, it's a red day so far, it may be a good time to enter into a trade. So by default, if I know the trend is going in my favor, I can set up a credit spread like this, for instance, where you gain 12 and you lose 88. But because I'm trading with the trend, this bumps my 85% win rate up to 95%. So again, this has been historically backtested, and I'll show you exactly how to know these numbers and the step-by-step plans for the strategies you take at the very end, but please stay tuned. Okay, so let's say we bump our win rate up to 95% by doing this. What are our new numbers? Okay, well, this changes to 95 times we win $12, minus we lose 5 times and we lose $88. Now we have a positive $700. So that means we have a win rate of 95%, and we have these same two numbers, we're actually going to end up plus 700. So that is amazing. Plus 700 is obviously a huge difference. It's a $1,000 difference from minus 300. So that's how you can actually really change your results. So a lot of credit spread traders are just going based off the theoretical numbers, but have no trading edge. If you're using support and resistance, you're using MACD, or using something that consistently helps you know the general direction that a stock will go, that is an edge. And that will help you bump your win rate up on credit spreads from the theoretical 85% to the actual 95% or higher than that. And so that's what you're looking to do. If you want to be consistently profitable from trading credit spreads, you need to have an edge. I actually give you my edge for free, and the description down below is a free trading PDF that walks through the exact strategies that I use and created. It shows you step-by-step how to take them, the entry rules you need to look for, the exit rules, and everything. So all that is step-by-step down below for free, so check that out. But anyways, to answer the common question I get, are people consistently profitable with trading credit spreads? Yes, I am. My members, which I have 150 paying and active members inside my 10% credit spreads community, are all making money, and they do so consistently. I see on Reddit, I see on YouTube, people who have an edge, who know the general direction of the market, will be profitable. All right, guys, I hope this helped. If you enjoyed this video, please smash that subscribe button, because I come up with videos every single day to help you become a better credit spread trader, and smash that thumbs up button. All right, guys, I'll see you in the next video.